Good day, everyone. Welcome to Accounting Expo with Abisola Beke, your financial accounting teacher. In the last video, we did introduction to subsidiary books of accounts. So today we shall be looking at one of the types of subsidiary books of accounts, which is purchases day book or purchases journal. What is a purchase day book? The purchase day book is the book of original entry or prime entry that is used to record transaction involving credit purchase of goods meant for resale. It is worthy of note that the purchase of fixed assets on credit basis is not recorded in the purchase day book or journal. Rather, it is recorded in the proper journal. Then, goods bought on cash basis are equally not recorded in the purchase journal or day book. Rather, it is recorded in the cash book that is meant for all cash transactions. So today, I shall be illustrating the preparation of purchase day book using Bezali stitches. Come with me to Bezali stitches and let's start preparing the exercise with this illustration. Thank you. Let us look at the format of the purchase day book, that is the columns of purchase day book and what it looks like. So first and foremost, on the format, the name of the entity involved is what is written on the format first. For example, this illustration purposes, it will be Bezali stitches that will be written as the entity title, followed by the day book we are preparing, which is purchase day book. Now, the first column in the format of the purchase day book is the date column, followed by the particulars stroke account details column, followed by the ledger folio column, the invoice number column, amount column, and the total column. So now let's look at each of those columns I highlighted above, what they are used for. For instance, the date column is used to record the day, the exact day that each transaction with the creditor took place in chronological order, that is according to the order of occurrence of each transaction. So meaning the transaction that took place first will come first in the dates column, is in line with the order of their occurrence. Then the next one is the particulars column or the account details column. This column contains the name of the parties, the people and organization, that is the creditor, from whom the goods were purchased on credit basis, that is the name of the organization, the creditor. Each creditor that the goods were purchased from on credit basis will be written in that column, as well as the details of transaction involved in terms of the quantity of the goods, the quality, and other description like the rate of discount receivable, packing charges, and so on and so forth. The next column is the ledger folio. The ledger folio has the reference page of the credit transaction in the ledger. It is worthy of note that in accounting, principle of double entry is applied, is a key principle in accounting, and in the ledger, entries are made on dual aspect basis. So the ledger folio on which this particular transaction is recorded will be documented in this column. The next column is the invoice number column. The invoice number column is used to indicate the number written on the purchase invoice from which entries into this purchase day book originated. The fifth column is the amount column. This column is used to document the monetary value of each of the items, each of the supplier. It equally includes adjustment for trade discounts, packing charges, and so on and so forth. The last column in the purchasable format is the total column, which is used for documenting the net amount payable to each of the creditors, as well as the total amount payable to all the creditors, and this is totaled at the end of the month or the end of the period. Now, for better understanding of this topic, we are going to use this illustration exercise to prepare our purchase day book. On 1st January 2024, he started business with 11,000 naira. That's not an entry into purchase day book. Then out of the money, he used 5,000 naira to rent the shop apartment, then purchase garment rack with 3,000 naira cash on 4th of January. Now, 5th of January, he bought the following items from Ajala on credit basis. 2 ladies wear at 30,000 naira each. We have 4 packet shirts at 8,000 naira. So followed by 4 children's wear at 3,000 naira each. So in the question we have, these purchases attracted a trade discount of 10%. Now for the invoice number 120. The next transaction took place on the 8th of January when he purchased 10 men's trousers at 1,000 naira each, 6 packet shirts at 2,000 naira each, 4 ladies wears at 5,000 naira each from Taye, all of them less 5% trade discount, and the terms of payment was shown on invoice number 30. The next transaction that took place was on the 9th of January when he brought children's wears, then the invoice number 5. Then the last transaction took place on the 30th of January when he bought the following items from Titi: 5 women's wears at 5,000 naira, 3 packet shirts at 4,000 naira each, 6 children's wear at 6,000 naira each, less 10% trade discount. Terms and condition of payment shown on invoice number 700.